Hey, what's up, traders? Welcome to the full course of Mastering Supply and Demand, your guide to trading precision. If you can truly master supply and demand, you will have a powerful edge in making consistent profits. So in this video, we are going to dive into how supply and demand drives price movement in the forex market, and I will show you how to spot these zones and how to use them to find high probability trade opportunities. So let's dive in. Alright, what is supply and demand? This is a simple definition of supply and demand. It says supply is where there is an aggressive sell pressure pushing price to the downside, while demand is where there is an aggressive buy pressure pushing price to the upside. Now we will move over to the examples of supply and demand. Alright, so looking at these very examples, this is supply and this is demand. Now starting with supply, we have the two types of patterns that forms in supply, which is the reversal pattern and the continuation pattern. Now for the reversal pattern, whenever you see price at the top consolidating before that aggressive sell to the downside, we should know that there is a lot of sellers momentum pushing price to that very direction. Now, what you guys must understand is that whenever you are trading supply or demand, it has to be all about trading with the big players. You have to identify where the big players are trading and trade with them. You don't want to be trading against the big players. So at this point, after I must have seen this consolidation forms at this very top, and with that had that aggressive sell to the downside, what I need to do is to map out that very point, to draw out that very point that was formed before an aggressive sell to the downside, waiting for price to pull back at that very level in order to sell. That is how it works. Now the same thing goes for the continuation pattern. Now what you guys must understand is that whenever price is expanding to the downside, there has to be a point where price has to stop, consolidate a bit before pushing to that very direction. Just like we had at this point, we had price pushing towards the downside. Now it gets to a particular level where it has to stop, then begins to consolidate before we had that aggressive sell towards the downside. When I identify this means that there's a lot of sellers momentum pushing price to the downside. Now what I want to do is that after I must have seen price breaks out this very consolidation zone, I want to be expecting price to pull back to this very level in order to sell. So at this point, I want to map out that very point which price formed before the aggressive sell to the downside, expecting price to retrace back to that very level in order to sell. That's how supply works. Now moving to demand, the same thing goes to demand. This is the reversal pattern of demand and this is the continuation pattern of demand. What do we expect? Whenever we see price at the bottom forming a consolidating, then we have that aggressive buy towards the upside. It means there's a lot of buyers momentum pushing price to that very direction. So what do we need to do? After I must have seen price breaks out of that very consolidation, we should expect price to retest at that very level. So at this point, what I'm supposed to do is that I'm supposed to map out that very point we had price consolidated before that aggressive push to the upside, then expect price to come at that very point in order to buy. That's how the band works. Then for the continuation pattern of demand, you understand that price is actually rallying to the upside. It gets to a point where it starts to consolidate. Then after price consolidated, we had that aggressive buy towards the upside, breaking this very consolidation zone. So now what do we expect? We expect price to pull back at that very level in order to buy. So at this point, I want to be interested to map at that very point which price formed before the massive buy to the upside. Expect price to retrace back inside of that zone in order to buy. And that's generally how supply and demand works. So let's head over to the chart so I can show you how this supply and demand forms, how to draw them and how to trade them. Alright, so this is generally what the supply should look like on the chart. Now looking at the formation of this pattern on the top, this is actually a reversal pattern. When you see this type of pattern, just know it's a reversal pattern. Now what do we expect? We expect price to break out of that pattern. Now after we must have seen price breaks out of this very pattern, we should look out for the supply that created that break. So at this point, if I want to be interested to look at for my supply, I want to be interested to map out the last bullish candle that formed before the aggressive sell to the downside. So this was the last very candlestick pattern that formed before the aggressive sell to the downside. So I want to be mapping out that very point, then waiting for price to pull back at that very point in order to sell. So if I want to be interested to sell at this, I want to be interested to sell at this very point, because this, after we had that break to to the downside, we had that pullback inside of that level. So I want to be interested to sell at this point. My SS should be above that my supply level, and my TP should be below. That's how it works. We also have another second entry on that very zone. We had price came back at that very point of supply. So if I want to be interested to sell again, I want to be interested to sell at this point, then my SS should be above that supply and my TP should be below. At least you guys should know that you are supposed to be maximizing your profit and minimizing your losses. We also had another formation, another pattern. This one is more of like a continuation pattern. We had price consolidated and we had the break towards the downside. Now what do we expect? We expect, after we must have seen that break, we should expect price to come back to that very supply zone for us to sell. So if I'm going to be interested, I want to be interested at this very supply zone. I'm to be interested to map out my box at this very supply zone, then waiting for price to come back at that point in order to sell. So looking at what price did, price came back at that point and we had that reaction to the downside. So if I want to be interested to sell, I want to be interested to sell at this point, then my SS should be above that supply and my TP should be below this point. That is how it works. Alright, so we also had another supply zone forming around this area. Now the first supply was formed at this point. Now after looking at what price did, we had that little consolidation and we have the break. So I want to be interested to map out the last bullish candle that formed before the sell to the downside. So looking at what price did at that point, after we must have seen that very seller's momentum to the downside, we had the retracement inside of that point. And what happened? We had the reaction to the downside. So if I want to be interested to sell, I want to be interested to sell at this point. Then my SS should be above that supply and my TP should be below. Now looking at another formation of supply zone, we also have this consolidation forming around this point. Let me move that a little bit. We also had another formation, another supply and demand formation forming around this very point. This is more like a consolidation, and we have that massive sell to the downside. Looking at that very candlestick, it means that there's a lot of seller's pressure pushing price to this very point, breaking this point, this very consolidation point. So what am I supposed to do? I want to be looking out for that supply that created that push towards the downside. So if I want to be interested, I want to be interested to map out the last bullish candle that formed before the aggressive sell to the downside. So looking at what price did at that point, we had that pullback towards that level and we had that sell to the downside. So if I want to be interested to sell, I want to be interested to sell at this point, and my SL should be above that supply, my TP should be below. That is how it works. Now we also had another one that broke in at this very point, but price never came to that very point. Even looking at that, what price did when it came at that point, we had price reacted at that very point. This is a supply zone that created this very break. Now looking at what price did when price came back at that very point, we had that day reaction to the downside. You understand? Now we also had another supply zone that formed after this very point created. We had this point that formed, we had the massive sell to the downside, and if I want to be interested to map out my supply, I want to be interested to map out the last bullish candle that formed before the aggressive sell to the downside. So looking at what price did, we had that very pullback to that very level and have the sell to the downside. So if I want to be interested, I want to be interested to sell at this point. My SS should be above that supply and my TP should be below this level. So that is basically how supply works. I will be moving you guys over to the next example, which is the demand. Alright, so this is basically how the demand should look like on the chart. Now looking at this the formation of this pattern, we had price consolidating at that very pattern. We had this first rejection, second rejection, third rejection, telling us that price is actually consolidating at that point. So what do you expect? We expect price to break out of that consolidation and pull back to that very level that caused that very consolidation. So at this point, this was the supply zone that caused that break of structure. So what am I supposed to do? I want to be interested to map out the last bearish candle that formed before the bullish candles or before the bullish move to the upside. So I'll be waiting for price to come back to that point for me to be able to buy. And looking at what price did at that point, we had, as soon as price came at that point, we had price reacted to the upside. So if I want to be interested to buy, I want to be interested to buy at this point, then my SS should be below the demand and my TP should be above this level. So as soon as price keep pushing to the upside, new levels of demand is being created. Like we also had another demand at this point. We had price rallies back to the upside, causing this break of structure. Now what do we expect? We expect price to bounce back at this very demand level for we to be able to buy. So looking at what price did there, we had price came back at that very level and we had the reaction to the upside. So if I want to be interested, I want to be interested to map out the very last bearish candlestick pattern that formed before the aggressive buy to the upside. So looking at what price did at that point, we had price came at that point and we had the reaction to the upside. So if I want to be interested, I want to be interested to buy at this point. My SS should still be below this very demand and my TP should be at this very point. As soon as price keep pushing to the upside, also having new levels of breaks, just like he had another break at this very point. That price broke this very point. So what do we expect? We look at for that very point that created that break. So after we must have seen this break to the upside, we should expect price to come back at that very demand level that took that to that very high. So at this point, this was the last bearish candle that formed before the rally to the upside. So I want to be interested to buy at this point after I must have seen this very pattern formed. I want to be interested to buy at this point. Now looking at what price did at that point, we also saw price reacted to the upside. So if I want to be interested, I want to be interested to buy at this very point. And my SS should be below that demand. My TP should be at this very point. So that's a basic breakdown of how supply and demand drive forex price movement and how you can use these zones in your trading. If you found this helpful, make sure to subscribe for more straightforward trading guides. Thanks for watching and I will see you in the next video.